Hey guys, welcome back to a brand new video. I'm RexFinance, and today we're going to be talking about something that you're probably not used to seeing on YouTube in today's day and age. You know, right now we're all feeling the effects of the current recession that we're more than likely experiencing right now. So a lot of YouTubers are clickbaiting their titles with the word recession and a bunch of doom and gloom buzzwords. This is the opposite of that. Today, we're going to be talking about why the second half of this year is more than likely going to be very lucrative and beneficial to the bulls in the stock market. There are certain things happening behind the scenes that the markets are kind of ignoring right now, but they're very, very important. And they're also things that obviously could lead to a bull market throughout the second half of 2022. But first, before we get into it, I have to ask you guys a huge favor. Since I'm not using the recession word in the title, since I'm not using those doom and gloom buzzwords, this video naturally isn't going to get as many views as it probably would if I chose to use those taglines. So, I want you guys to do me a favor and hit the like button down below to help push this video out to a broader audience. I greatly appreciate it. And lastly, if you guys are new here or returning and not yet subscribed, I would greatly appreciate hitting that subscribe button down below. Without further ado, let's go ahead and jump into this. So the first thing we can look at is actually history itself. Basically, anytime the S&P 500 started off the trading year down 20% or more during the first 132 trading days, the second half of that year, or after day 132, in that year, there tend to be very lucrative returns for investors. For example, in 1970, started off the year down 19.6%, and throughout the rest of the year, from that point forward, the S&P 500 returned 24.3%. The same thing can be said about 1940, 1962, and 1932. Now, it's no given rule that this has to happen, that if the stock market starts down this bad, that things have to be green throughout the rest of the year. There's no rule that says that. But according to history, it's very likely that happens because if the stock market is down so bad, so fast, it gets to be a point where it's hard to press down prices any further. Bulls are going to step in. Prices are going to get discounted enough that it starts to be a great deal to investors, and they start to hit that buy button rather than the sell button. And remember, all we need to have happen for prices to start going back up higher is for the amount of buyers to outweigh the amount of sellers. That's something that really hasn't happened for quite a while now. Another fun but also kind of sad note is 2022 is the second worst start to the year for the S&P 500 in its history, only lagging behind the Great Depression in 1932 when the stock market started down 43.3%. But we can even look there and see that after day 132, throughout the rest of the year, the S&P 500 returned 50.4%. I hope we get close to that number, but even if we don't, I think this all adds up that there's a pretty good chance we're going to be at least green throughout the last half of this year. Now, moving to some more specific things that we can point to in regards to the economy improving or things getting better for both businesses and consumers. Obviously, you've been living under a rock. If you haven't noticed, oil prices have finally been falling. Over the past month alone, the price of oil has gone down by 20%. This is good for both businesses and consumers because whenever oil prices go up, businesses pay in two different ways. They either have to raise prices on their end consumer, or they have to cut jobs, or they have to do a little bit of both to make up for that increased expense when it comes to the price of oil. Because for any transportation need, obviously that costs gasoline, that costs diesel, that costs oil to do so. Whether that's shipping people, shipping products, shipping raw materials, etc., it all adds up. And businesses have to balance out their expenses with their income. And if their expenses go up, they have to find a way in other places to help bring down those expenses again. And obviously, as a result of that, the consumers pay in two different ways as well, by losing jobs and also by having to pay more for their groceries, to go on vacation, to travel anywhere, to go out to the movie theater. Wherever they go, they're paying more money, leaving them with less discretionary income to spend. And we all want lots of discretionary income because that benefits the economy. When consumers have excess capital that they're willing to save, spend, and invest. Just to give you a quick example of this happening in real time with businesses cutting jobs, this website has a massive list of different companies that have started to lay off employees, starting with Tesla, White Hat, Spotify, All of AI, Netflix, Vault, Coinbase. all of these different companies, Uber, CVS, Ford, this whole list of companies has started laying off employees to help offset that increased expense that they're feeling from oil prices going up, but also from the supply chain issues they've been experiencing. But I think that leads me right into my next important point. Supply chain challenges, obviously we've all experienced them. Those came as a direct result of the COVID-19 pandemic, and for several months now, those supply chain bottlenecks and constraints have slowly been getting worked out, which is very good. Now, the important part is the supply chain issues we had weren't due to capacity issues, they were due to logistical issues. We didn't have an issue with producing enough stuff, we had an issue with shipping enough stuff and getting that stuff to where it needed to go. Logistical issues tend to be much easier to fix, and they're fixed much faster than if we had a capacity issue, a supply capacity issue. And obviously, as I already said, lately we've started seeing these logistical issues get worked out, and supply is finally starting to reach their end product. But whether or not it's a capacity or a logistical issue, it really doesn't matter. It all leads to the same result, and that is increased prices, which nobody wants. Businesses don't want to pay more for their stuff, and consumers don't want to pay more for their stuff. But what you'll start to see as these supply chain issues continue to get fixed and get worked out is heavy deflationary pressure on the economy. When new vehicles start getting the chips they need to hit the market, to be sold, and complete their production basically, that's going to lead to an influx of new vehicles, decreasing the price of used vehicles because there's not as much demand for those used vehicles, which is natural deflationary pressure. I don't even need to mention how oil prices going down have deflationary effects on the economy. People are paying less to do things when oil prices come down. It's the same thing when supply chain issues get fixed. Better yet, it's not just oil prices that are coming down. It's corn prices, wheat prices, soybean prices. All these other commodities are also starting to come down in price, which makes producing food less expensive, which means consumers will have to pay less for food because businesses have to pay less to produce that same food. Corn is also used to create ethanol, which more and more is being included as a supplement to gasoline. As these crop prices start to come down, that also means that it's going to cost less to feed the hogs, to feed the cattle, etc. Which means, again, it's less expensive to produce that beef, to produce that bacon, etc. And perhaps the most clear evidence of what I'm talking about in this video comes from Target and comes from Walmart. As these logistical issues are being worked out, there is an influx of supply coming into Target and Walmart. And both those retailers are having to get rid of that inventory that's coming in super fast. Target expects squeezed profits from aggressive plan to get rid of unwanted inventory. The way these grocery stores get rid of unwanted inventory is by lowering prices, running discounts, running sales, running deals to get rid of that inventory, which again is more deflationary pressure on the economy. Walmart says reducing inventory glut will take a couple of quarters. How they're going to get rid of the inventory glut? Running specials, decreasing prices, having discounts and sales on items. That's how they're going to get this done. Deflationary pressure on the economy, leaving consumers with more money to spend in their pocket, more discretionary income. Furthermore, another item that is going to come down in price are airplane tickets, airfare tickets, bus tickets, transportation tickets. With oil prices coming down, energy prices coming down, all of those things are going to lead to more money in the pockets of consumers, which is what is hopefully going to spur this economy back into action. So, as a result of all of these things I've laid out in today's video, I think there's a pretty good chance that the rest of 2022 is going to be very bullish, and we're going to have a very green second half of 2022. Obviously, I'm not a financial advisor. I could be completely wrong about all of this stuff. But those are some things that are happening behind the scenes that some investors seem to be forgetting about that are really pointing to a good, healthy economy throughout the rest of 2022, that are all leading to more money for consumers to spend throughout the rest of 2022. I personally think as a result of all this deflationary pressure we're about to see on the economy, that inflation is kind of going to be in the rearview mirror when it comes to election time in November. Convenient, huh? But that's kind of another thing. The Democrats right now have incentive to get the markets to go back up before election season. People don't realize how big of an impact the economy and the stock market can have on different election cycles. It plays a huge part. And furthermore, I've been saying this for several months now, but I think that towards the end of this year and going into the first half of 2023, deflation is going to be the major problem for the economy. Inflation will be far, far away. We're going to forget about inflation and the worry is going to be deflation. If that ends up happening, remember who told ya. But anyways, if you guys enjoyed this video, again, please hit that like button down below to help push this video out to a broader audience. Also, if you're new here or returning and not yet subscribed, please subscribe down below. I like seeing all the new faces. Also, comment down below how you feel the rest of 2022 is going to go. Do you agree with me? Do you disagree with me? I want to hear all of your thoughts. And lastly, I just want to say thank you for all of the feedback on my most recent video. That was amazing. It literally made me smile ear to ear for several hours throughout the night. So thank you so much for that. It feels great to be back in the saddle here. I'll be back with a brand new video on Monday. Have a great rest of your day. Peace out.